All right. What's up, squad? Welcome to Game Plan Sundays. Today is January 5th, and we're here with our session. As we do, we take a look at the previous week, what we know is coming down the pipeline. How can we use that information to make some money in the markets? So, anyhow, last week, man, it was pretty interesting, first week of 2020. So happy New Year to everybody. In the markets, we hit new highs, which, you kind of expected it because the markets is being just crazy irrational. So you get these new highs, and then you get this crazy panic sell-off at the end of the week, and everybody knows the story. World War III, that's what's blazing the headlines right now, sending jolts to the stock market. So let's just talk about that for a second, and then we'll get into what we do. So basically, as you guys already know, Trump, U.S., forces killed the general of Iran, top guy, and also another leader in Iraq that killed some major people over there, basically. And Iran basically, are promising that they are going to revenge. They're going to avenge his death. And so, people are scared that there's going to be World War III, which is very likely. War is an interesting topic because, the economy actually does good in war times. If you ever looked at history, you'll see the economy actually does better during war times. Why? Why is that the case? During war times, because they just run up the check and spend lots of money so they can do, military spending, right? And that creates jobs. Looking at the markets last week, I saw the defense sector started to pop real nice because of that. All the defense stocks are shooting through the moon. Gold stocks is popping crazy. Gold and silver, like all those stocks, safe havens was popping, and then the defense sectors and oil at the same time, because, Iraq and Iran, these guys are the top producers of oil, part of OPEC, and just overall not positive with this whole war thing going on. But again, it's very much likely that we may end up in this war, may escalate. I think even right now, Trump is tweeting, talking big talk right now, like, hey, I'm going to kill everybody if y'all mess with us. He's like, we got so much money and all this new equipment, we ready to use it. And so y'all know how Trump he talk a big talk. And, this thing, I don't think it's going to go over well. And I don't think it's going to just go over overnight. I think this is going to be, a new risk that's added to all the other things that we already have to worry about in the markets. So we got to keep our eyes on that. So, but on a positive note, keep in mind next week, the trade deal phase 1 is supposed to be signed from China and U.S. Next week, next Wednesday. So that's something to keep in mind. Now, also last week, we did have some economic data. We had the ISM numbers that came back that were actually lower than what the economists was projecting. And you guys already know we already been in recession levels with the manufacturing numbers. And they're actually continuing to trend lower. And that was expected for them to rebound, and that never happened. And so manufacturing, transportation, all these things are just in a recession levels, basically. So it's not good on the economy from that perspective. But you got to keep in mind, the Feds has been propping the economy up. And a lot of people probably don't know much about the repo markets. Most people just live in the matrix and use the matrix, but don't understand how the matrix works. It's all about money, okay? Understand this world is all controlled by money. So that's why it's important. That's why we're here talking about these things, so that you guys can understand money, how this stuff works. So with the banks, you guys remember last year, I think in September, the banks ran out of money and the Fed started pumping money into the systems quickly. We had shocks in the market, and similar to right before we had the previous crash. So liquidity is a major issue, and I think this is something we got to worry about coming up this year also, because the Feds, they've been pumping up this liquidity in the markets, and they are scheduled to stop in April, I think. So in April, so I think in April they're supposed to be stopping that, pulling out. But it's crazy because they're feeding. You see the stock market hitting all these new highs. That's because the Feds is just pumping this money in there. There's no fundamentals, no reasons for it to be doing that. But because the Feds is back and the Feds is shooting that money in there, and they got the money to blow. and they're pumping it in there. And the Fed is claiming that they can't see inflation. They're not finding inflation. In fact, they're actually killing us with inflation. Well, inflation is actually really high, and I think that we're going to get a case of hyperinflation, and the Fed is probably going to try to correct this thing, and they're going to ruin everything. So they're basically creating imbalances throughout the economy by interfering with the system, which they always do. It's nothing new. This is what they normally do. So just keep that in mind. That's something we're going to have to look out for. And, this year, the beginning of this year, is that when the Feds decide that they're no longer going to feed the markets, they're no longer going to shoot liquidity in there, then what are these banks going to do when they want it? They're fiending for it. I don't know if they're actually in a position that they can actually pull out. And because right now they're interfering with the system. They're in, place injecting the money to keep this market propped up. So let's understand that's, what's happening right now. And coming in April, we have to see how that's going to work out if the Feds will be able to pull out of the markets with their, QE4, repo, saving the banks. They're already doing these things right now. So again, we got to keep our eyes on this, on these developments here. Other than that, we'll still have economic data that's flowing in, and, we'll have to see how those things go. Unemployment, I think we talked about this in last Game Plan Sunday. Key things that we have to watch out for is going to be the unemployment rates. OK, which I think we're starting to see those uptick, more because the labor market is tight. And we saw through the ISM numbers, these manufacturing companies are slowing down and hiring. They're not hiring, they're actually laying off, which, again, when those jobs start to fall off, we had a tight market, so it's hard for people to be able to move around to different jobs, right? So again, we're just talking economics here, how this stuff plays out, and a lot of stuff that we see is lagging indicators. Don't forget the yield curve inverted. That was our heads up, our warning that a recession is to come. What we're seeing right now is if they can actually hold this economy up, until Trump can win a 2020 election. They're not even factoring in that Trump could possibly lose the election. If Trump loses the election, it's going to be mayhem in the markets. So they're not even that's not even priced into the markets. That presents another risk also. I mean, I think it's highly unlikely that he does, unless, this war thing picks up and, or we slide into a recession before that time, then he's definitely going to be in a lot of trouble. So anyhow, those are, key themes to keep in mind, coming in for 2020. So, but remember, the positive note is phase one of the trade deal is supposed to be going through next week. Hasn't gone through yet, but next Wednesday, they're supposed to be signing it. And, we can probably, if that goes through, then we can anticipate for the markets to rally. But right now, markets are down. I don't know if you guys are able to participate in this down movement from last week. I think Ron was also, a couple of you guys been able to participate in this. We got some situations off in gold, and gold was popping really nice. So gold was popping really nice. Oil was popping. I didn't get off into oil, but I did get into gold. Before I actually get into this, because I forgot I got the screen up over here, 2020, man, we do this survey thing. And I don't know if you guys had time to actually participate in the survey, but, just something I decided, hey, let's do this every year. And I just want to give a huge shout out to Mia, Vonda, Keith, Demita, Willie, and Lamont, because they actually, forecasted the best sector of 2019, which is technology. And again, it's just for fun. Don't nobody know how it's going to end up. So I definitely encourage you guys to participate. We got one rolling right now for 2020 that's on the page and also in the group on Facebook, where you guys can see that right there. So anyhow, make sure that you participate, and then next year we'll see who gets the win right there. All right. So getting that out of the way, I did want to actually introduce you guys to, I wrote this book last year and I actually forgot all about it. And my wife was like, hey, what else you ever do with that book? I was like, oh, she's like, you should get it out. So anyhow, if you know anybody that's new to trading, that's want to learn trading, make sure they get my new Intro to Options Trading book right here that I put together for you guys. Got a couple pages, actually a lot of pages in here, giving you the whole blueprint on how to trade options from beginner to actually making you some money with a few simple strategies. Again, this is not the master class. This is just the trading book. So again, I'll make sure to share, with you guys the link for this. But this is the new Intro to Options Trading for anybody that's new and I'll share that link. And you guys can share this link with your friends and family members too if they want to know. This is free, my free intro to options trading book. So anyhow, taking a look at the markets here right quick. Right now, just got the Dow Jones up, which is slightly down right now, down 100 points as we see. I'll show you guys over here. You can quickly look over here. Dow down about 100 points. It was down worse than that earlier. So it's actually starting to relieve itself a little bit. The Russell's down slightly. NASDAQ down slightly, 30 points. The ES is down 11 points. Gold is popping, it's up right now, 16 points. And then bonds is also popping as well. So, again, we play the TLT for bonds. So, with that being said, I think that if things don't deteriorate overnight, as of right now, they're down, but it's not bad right now. Okay, so remember the night before Friday, I think the Dow was down like over 200 points before the session opened in the morning. So you already knew it was going to be mayhem. I think Justin actually tipped me off as soon as it actually jumped off. It was like, hey, you're looking at the futures. And I looked and I saw, I was like, wow, okay, this is going to be bad. So the numbers that we're looking at right now are bad, but they're not like, it's going to be drastic. This can correct itself overnight if nothing, terrible happens. But if something negative, further continues, then this thing right here can get really bad. And so the way that I want to look at this here is gold is still on play right now. If you guys look into the gold futures, gold is it's actually hit its top up here, but you gotta remember from the last game plan Sunday that we did back in 2019. We was talking about playing gold. We saw the flag play or the pennant play, and then we had the event that made the play pop off. We had the squeeze and all the technicals and alignment, but gold shot up and it hit the ceiling. Now it's overbought. So do you want to be getting in at gold at this level? I don't think that you want to get in at gold at this level. You see, this is a key resistance level. You need to let this come back some if it's going to come back. All right. If this is going to come back, then let it do what it's going to do. I'm already in position on this one here. And so, it's got to be something bad for this to go even higher. Typically what you'll see in this kind of formation is that, it'll consolidate and probably form like another flag. That's what you would normally see when we hit these kind of levels here in gold. So if you trade in spreads, that's probably fine, again, because the sideways movement to the direction movement, that's 2 out of 3 ways that you'll make money, with the options, and you'll play the GLD on that. Bonds is in a better situation than gold. As we looked at the charts, gold is in it's an overbought territory, but bonds is not. And so coming into this week, I would like to get some focus in on the bond sector just because it's at a better price point. Okay. So because it's at a better pricing point, you can see right here, this floor, this is a better pricing point than where gold was at. And I got a target up here about 145. It's 143 on the Fibonacci, but you can say somewhere around 143, 145, because it's my second level is 145. So that's what I'm looking at for those 2 levels here. Bonds got some space to go. We see momentum shifting here. We see the trend is in direction. Got a couple buy triggers in here. Now on the intraday, check that target right there. That's 618. You want to see it clear that. That's a 139. What level are we at? Let me actually zoom in on that just a tad bit more. So it's about 139 and 33 cents. So let's see. Yeah, so that's a key level here. Again, yeah, we want to see it clear this zone here, right? This zone here, it needs to clear that, before we get into the next move, and it could come up some and then bounce back a little bit. Y'all know how the markets do. So just respect your levels, respect the fib levels, respect your moving averages. But that's what I'll look at with that. Excuse me, Terrence. Yeah, man, you guys, you got to, if you want the full screen, you need to be in the chat room. The Facebook doesn't give you the whole story, how they cover it all up. But yeah, if you join the chat room, then you get the full screens for the best experience. I normally tell you guys this every week, so I'll continue to, get you guys updated and acclimated on the Facebook side. That if you want the full screens, you got to be in the chat room. for this one. That's why we pay for this chat room, so we can get this best experience. So anyhow, with that being said, I like that. Now, something that was interesting to me, you guys look at my high liquid faves over here, and this is just my quick shoot watch list. Tesla was a nice pop off last week. I didn't get in on that, but Chipotle is actually in an interesting situation. So I do want to pay attention to Chipotle and may very well get some exposure. Chipotle, really expensive stock. Hate buying at these kind of highs, but I'll show you what I'm seeing here. Chipotle is in a very interesting situation. I mean, you can kind of quick shoot and look at this. It looks similar to a, inverse head and shoulders. This is a bullish pattern. And I believe that Chipotle wants to get up to the 900 target level. So 900 target level for Chipotle. Again, we're in this overbought territory though. So still want to tread softly. It's be one of those situations that, I'll be eyeing coming in, see how it performs on Monday and Tuesday. If we get a nice pullback or something like that. But what I wanted to show you was coming in on the options chain. If you take a look at the options chain, then you'll be looking at something that stood out to me when I just quickly looked at the chart was, let's change this real quick. Sorry about that. All right. All right. So if you take a look at these strikes here, it's interesting, right? Like, look how much volume is on these strikes. That stands out to me. Somebody got some big money over here. And it looks like a spread to me. It looks like a bull put spread. So that's exactly what I'm looking at here on Chipotle. Now, keep in mind, the expected move on this bad boy is 83. Now, this is a lot of volatility. I am looking at selling some premium on this thing because it's high volatility. And, want to make some money on that side. But, this is the price here. You subtract minus the 80-something points. That'll get you somewhere around, I think, 780 strikes. So you don't necessarily have to choose these two strikes with all the money on there. If you want a safer bet, you can go and to something like that. But, there's a lot of money that's on these strikes here. So I'm actually looking at these strikes in particular. We'll see how that plays out. There's, again, you have lots of interest on these unusual open interests that stick, 2000. Look at this. It's 2114, 2132. And then you get down here, you see 2000. So what do they know that we don't know? Do y'all see that? So that's what I'm looking at for that. If anything positive in equities was to pop off, I do like that. It's still a little early, it's the early part of the year. A lot of things haven't shaped up into formation, so we still got to filter this thing out. I also like to take a look at Costco, just because it's in a squeeze here. It's in an interesting situation. I mean, this thing can go either way as far as direction goes. But the key thing that I am noticing here is that it has found a floor level. So we had a floor level here. We do have a squeeze that's here. Now we do have a sell-off trigger, but it doesn't mean that it's going to sell off just yet. This could be one of those things where it sells off too much and reverses. So I just want to keep my eye on it right now. I don't want to enter it yet, but I'm just looking at an idea that this thing could go to the opposite side now, or it could sell off this way. I have to see how it's going to go. Right now, the signs are saying short on that, but on the fast stochastics, you see that it's starting to rip upwards. So if you just look at the thin line, it's zipped through. If I can show you, you can see how on the fast stochastics zipped down and now it's zipping back up. So this could be a shakeout, but either way, I want to pay attention to see if it's going to hold this level. This level is a key level of resistance that it typically will hold at. So I want to see if it's going to hold. And if that's the case, then it may be good for this thing to rally to the upside. So either way, it can go either way, but that's the idea that I'm looking at. Haven't had time to do too much research here, but those are the things that I have on my table that I'm looking at. With that being said, I'll take a look at some of the things that you guys want to take a look at, and then we'll bring the session to a close. Ron, I know you got some setups over there for me. What you got, Playboy? Make sure you got your game plan, your trading strategy also. 2020. Make sure you got your trading strategy. We got all these things over here, all these goodies. So make sure that you got those popping. You got the books and all of that. Print them out. Telling you, I used to keep these things at my desk for freaking years trading, just in case. Like, because sometimes, I mean, you just get crazy and you start making wrong trades. You know what you meant to do, but then you put in the wrong trade. Anybody ever did that before? It's crazy. All right, so we're looking at wing stock. All right, wing stock. Haven't seen them is this what I'm looking at? Yeah, wing stock. All right, it's been a while here. Let me clear this off. I like this. This is an inverse head and shoulders right here, Ryan. I mean, again, you can just quickly look at it and just see what it is. Call it like it is. Let me see if I can get some levels. I'm gonna go from. Let me take this annotation off. I know Terrence is asking about the Fibonacci. Here you go to show you how I use it. Let me try to drop the chart down just a tad bit for you guys on the Facebook side so you can get a glimpse here. All right, so we just take this swing high, which is the mountain high, to the valley low. Bingo. That's the big swing. But there's also swings within the swing. So this high here, this is another mountain high to this valley low. So we do it like that so we can get the intra levels. Okay. So key thing that I like to see on this one here. Let me just pull this up. Oh, you're welcome. Let me switch back to yellow because that red is killing my eyes. All right, so we got this left shoulder here. We got the head right here, and we're at a shoulder point right here. Okay. This is the way this setup typically plays off. Okay. At this level here, the 618, respect that. That's a major resistance level up ahead. So if you get enough profits when you get to this point, that'd be a good exit point. Okay. I do have some from the intra swing from this level to that level. That is the target around $97 though. So I do have like a $97 for that, for the intra, swing there. But again, if you hit your profit targets at this level, exit. You know what I'm saying? Like that's just going to be a good level for you. Next level will be this level. $100 is a psychological level, and it's here basically to the 786. That's one of those whole numbers that the stock markets like to use. And then we got the second extension at these levels. So these are all the key resistance levels up above for that. But I do like that to the bullish side. Thank you, Ron. What else we got? AVAV. AeroVironment. Oh, this is a defense stock, maybe? Had a nice big run on Friday, so this is probably a defense stock. Yeah, Ron said it is. Okay. I imagine. Sometimes you don't remember names, sometimes you don't know names. You don't need to. Let's see. Let me take this swing high to this swing low. We'll see. Let me actually swing it this way. All right, so I'm going to swing it from that high to that low. And it does have that target up ahead, as you see. You want to see how it behaves up against this level here, which pretty much came near. You want to see how it behaves there. The squeeze, it isn't a long squeeze, though. So, these sometimes can fire off dud, but it actually didn't fire dud. It actually fired long on Friday, which is good. And it's going up. So that'll be the target. Excuse me. This would be like the target right here on this one, $75. So that's a nice target there, but I do like that to the bull side as well. All right. Anybody else got anything else you want to take a look at? What's good, Topaz, Hannah, Jeremy, Ron? What's good, you guys? Okay. All right. Yeah, make sure y'all put your people on the new trading book. The new trading book that I was put together. Like, again, I wrote it a while back last year, finally able to get it out to you guys. Intro to options. I know Topaz was talking about she went to a trading conference and they was talking about witch hats and all kind of stuff. She was confused. I'm like, nah, all you need is the Wall Street Jackboy manual right here. That's all you need. Everybody else is going to confuse you. All right, so with that being said, it looks like we good to go. Let me check in with you guys. Kareem, you got anything you want to look at? Umar, Experience, you guys got anything y'all want to look at? Okay, you're doing a watch list. Perfect. Terrence, didn't get the URL for the chat room. I don't even have it on standby over here, but it's somewhere. Let me actually see if I can pull it up for you. It's the same URL every time. Same one every time. Okay. Okay, so that's the link right there for the chat room. So sorry for the late post on that one. USO on the oil side. Okay, so you guys are into the oil. All right. Yeah, so here we go on the oil side. The United States Oil Fund, which is interesting. It did have a pop off, and then it starts to come down here a little bit. So it's like it's forming one of those a flag here, a bull flag, possibly. When it popped up, hit those highs, it actually dropped. So if you wasn't in already, if you would have jumped in off the news, then you'll be losing money. So that's why it's important that you you don't just trade off your emotions. You want to wait till you get the levels. You want to wait till you get those levels. You get that hype. People are real hyped. Oh, I need to get in. I need to get in. But those gap ups, that's the way they normally do. You need to wait for them to come down to the mean and then catch them on the next wave up. All right. So you got to practice patience on these type of situations when they jump off. If you ain't in there before it pops off, then you're late to the move. The move has already happened. So these guys, they already got the profits off of that little, move, and then it's coming down a little bit. So, but I think that, with the whole situation with the Iran situation, had fears about, the oil and stuff like that. And then it sounds like they actually were able to get that under control in the oil markets there. But what you want to do is just keep your eyes on the crude. Keep your eyes on crude here, okay? Because this is the bigger picture here. When you're talking about the oil, you guys see it got red levels on top of green levels. This is a confluence here. This is a high level, which if you take a look back in history at this zone, okay, this came up there also, but this is where we are today. There's a key resistance level. And, we are at the overbought zones. However, this can still push, further. But I'll be careful at these levels, though. And again, if this situation with this Iran stuff continues to deteriorate, then that can be the catalyst for this oil to continue to go where it's at. We've been projecting for oil to go higher anyway. Nobody knew overnight that, Trump would just be killing generals. So, and that was that catalyst. That's when you get that long, big, green candlestick there. But just pay attention to, we do have some levels up ahead, right? So oil, I definitely think oil wants to take out that next high at 66.6, where we can actually carry this bad boy on up, but it hasn't gotten to that point yet. So I don't have any setups in oil right now just because there's a big gap up into resistance. We need to see if this is going to solidify. And normally, when they gap up like this, they start to, consolidate, form like a pennant or a flag before they make their next move. Dustin, what's good, my man? Happy New Year's. I know you guys are late. Shoot, I think I was late. Experience want to see Baba. Baba's going to be interesting too. I don't think the Chinese markets has really shown much in this situation. Baba's extended. It just tagged its new highs was on Thursday. So coming off of that low, it was a nice pop up, but then, they fell down Friday. I think most everything kind of came down Friday, except for like Chipotle. And again, that's another reason why I'm like looking at Chipotle also. Baba, again, I don't want to be coming in at Baba at these highs. You have to see how this plays out. Let me take a look at the long trend. On a weekly chart, this is, again, it's still extended. It's bullish, of course, but it is extended. If you take a look at all this head space up here and these overbought territories, this thing is out, it's up there. It's due for a correction, if you ask me. So we'll have to see how this plays out. But again, I don't have any setups. And so if I don't have a setup, I don't have a trade. I like to see setups. If I get a setup, then I got a trade. So I don't see this. I don't see anything in here for this one right now. Okay, and last ones here is going to be the defense sector. Topaz, she's calling out the defense stocks for you guys. Like Lockheed Martin, this was, again, crazy situation, crazy setup in a defense sector. You had all of those names: Lockheed Martin, Raytheon, which is RTN. Same thing. They just blew through levels, Northrop Grumman, what's their stick ticker? Northrop Grumman. Okay, NOC. Yeah. So this one right here is, this one right here looks good. This is a squeeze that just fired off, actually. And so with this squeeze firing off, I mean, this thing may continue to rise up. Again, if this Trump, he's still tweeting, talking about bombing people. It's got to be more than tweets. It's got to be bombs happening. But I think the real risk is, will we see retaliation on American soil? That's what got everybody shook. That can very much well happen. And if that happens, you can cool and believe that these companies are going to get all the money because they're going to be, manufacturing all kind of stuff for war. And remember, we talked about economies do better in war times because, you have, deficit spending. They start printing money for wars specifically for that. So, the Feds, they'll be able to get their inflation targets and everything else. Jobs will probably continue to go up just because, they'll be back in business, basically hiring even more. So that's another one. But if you just want to play the whole sector instead of having to go through individual names, just go to XAR. Okay. And so this right here, it will be like your best bet. You can play the whole defense sector here. Just put your, put your calls or whatever you want to put on here. Put your spreads on here. And this is almost looking like a cup and handle almost. But yeah, so it does have some levels up above, but the squeeze freshly fired off. And so you got some levels, about 120 at the top here that this can go to. So that definitely looks good. So XAR, if you want some exposure in the defense sector, that's the ticker that you want to play is the XAR. You can get some individual names in there if you want some more, bigger moves. This is going to move more steadily for you. So, but the chart looks good. Okay. And then what else? Yeah, that's it. Okay. So that's it for this session. We'll have to catch up in the weeks. Remember, we're just coming off the first week, coming off of New Year's, sizing the markets up. We go from one extreme to the next extreme. The market's hitting new highs at one level. And then next thing you know, we have war, fears. And then we get a nice panic sell-off, which I've been waiting for a sell-off. It's like, these assets are overextended. This is not a good place to be buying at the equity side. But I think there's another thing that's going to be interesting is seeing how the big money is going to be moving. What sectors are they going to be moving into? I think that we're going to start seeing more money moving back into bonds and back into gold. Or actually, we may be seeing gold again. We still see how gold plays out. And I think we may get some profit taken because gold hitting these highs here again. But we have to see. We have to see. Looking for some individual names that's not moving. In fact, we stocks might actually give us some good movement also. Where again, if things continue to get scary, investors are going to be looking to get out of exposure in equities. Where they're going to be moving the monies to. You want to try to get in those waves. We stocks is, depressed right now. There's some nice lows, to be honest with you. And so I think we stocks, most of the we stocks like CGC or what have you, I think they're at good points where, at any point, buying right now is probably good for those. So, but that's just pretty much what I see so far, man. But yeah, make sure, I'll make sure to keep you guys updated. I've been super busy trying to, get everything optimized. Like ACB, that huge, what sentiment is in the garbage right now. Okay, I'll take a look at that one real quick for you, Dustin. And then that's it. So ACB, Aurora Cannabis. So yeah, I mean, it's a penny stock. The chart is awful. Yeah. Yeah, it is awful. A lot of these stocks are awful, but I mean, this is a good price point though. Take a look at it. It was going for $10 at one point in time. And to where it's at now, it can go to zero though. So just, keep that in mind. It can go to zero. I mean, you can lose all your money. Yes, that can happen. But yeah, so anyhow, you want to see this thing, start to correct before you really get in on it though. But I think that, we may see that reverse. I think that because coming out of equities, they got to put this money somewhere. Equities is looking pretty overextended, and they have too much exposure in equities. They pump too much into it, and now we got risk entering to the scene. VIX pop off. I forgot to even check the VIX for you guys. Yeah, VIX is waking up right now. VIX fell asleep for this whole time. VIX go to sleep on you. They start to rack up. VIX go to sleep on you. They start to rack up. I've been telling you guys these levels here, man. They true. These levels hold true. Boom. You see what I'm saying? We get that, and then bingo. So where do we go next? I think we're going to continue to see more risk populating in the system here. Yeah, but cool. But so yeah, again, we still got to see how this stuff is going to start to take place and shape up in 2020. Still early. Be conservative in your approach. Don't go super aggressive right now, but make sure you got your trading plan together. I forgot to show you guys a new trading plan. I don't know if you got, the trading journal. A couple people got their hands on it right now. It's doing some testing for me, but if you got the trading journal, you'll get the new version for free once I'll put it out there. So don't even worry about it. You guys get your hands on a new trading journal, which is pretty dope. All right, gang, so that's it for our stock market strategy session for the week. What you need to know going into this week is that we do have the ISM numbers that's coming up on Tuesday, which is the non-manufacturing data. And then on Wednesday, we got the ADP job numbers. And then on Friday, we do have the unemployment and the job numbers. And this is all economic sensitive, market sensitive data that's going to be having an impact on the markets. Hey, make sure that you hit that subscribe button. Make sure you hit the notification so you get all the notifications when we post our videos. Follow us on social media on Instagram, Facebook, and YouTube. With that being said, man, I'll catch you guys in the markets this week. Peace.